Hey everyone, this is Monroe Mann and Bhavya Bandari from Break Diving. Both of us are very interested in the stock market and learning more and more about that constantly. Bhavya's a pretty good day trader, and I'm pretty good with covered calls, and together we're trying to improve even more. So she introduced me to this book called The Candlestick Course by Steve Nissen, and we're going to go over chapter 2 this time and then chapter 3. So I just reviewed this with Bhavya, and basically this is chapter 2, and all it's talking about, all this text up here, I'm just going to explain that to you as I explained it to Bhavya, and she said, yes, perfect, perfect explanation. So I'll explain it to you guys now too. So a candlestick is it shows a moment in time. So this could be a month. This could be 2 different months for a stock. It could be 2 different weeks. It could be 2 days. It could be 2 15-minute periods. Correct, Bhavya?
Yes, that is right. Even a 1-minute period, yeah.
Even a 1-minute period. And wonderful. I bet many women would love a 1-minute period, because then it would go away very quickly. That was a that was a joke. With the stock market. That was just me just joking.
I got it. But I'm telling, like, for day trading, 1 minute and 5 minutes, usually people look at. So it's so quick, within a minute you decide. So it's
make you decide. This is why I could see why some traders have 5 screens up, 5 different, because they need to have access to all this stuff immediately. And so you got the candlestick, you have the body, which is the fat part, and then you have the shadows, and there's an upper shadow and a lower shadow. And what these mean are, the body is what it opened and closed at. You can see here it opened at 30 and closed at 35. Here, this one opened at 35, closed at 30. Why are they reversed? Because in this case, the stock went higher and closed higher, and that's why it's white. And in this case, the stock opened higher and then closed lower. That's why it's black. So you can just look at it very quickly to know, did the day end high or low based on what it started from. And then you have these little ticks, these little lines at the top and bottom, which are called the shadows, upper shadow, lower shadow. And this just shows the range of where that stock went for the whole day. And then finally, if there is no shadow, it's called a shaved head, or I think it's called a shaved tail. Is that right?
Yeah, that's right.
Shaved head and shaved tail. And I think that's basically everything it talked about this. One thing that jumped out at me, Bobby, was the fact that it's talking about opinions. It says, a long, protracted, real body translated into very strong opinion, bullish or bearish. So here, this is a very strong bullish opinion.
Yes.
Because it started at 30 and it went all the way up to 35. This is a strong bearish opinion. It started high and then it ended low. And he was saying, if it's very narrow, if it only went from like 30 to 31, let's say here, or 30 to 30.1, that shows that there's not much opinion about the stock, right?
It's, but it's as you move forward, like, yes, but when it is patterned together, it gives some opinion as you move forward in the chapters. So it's like, it has, it's called different.
So by itself, it doesn't have an opinion, but when you put it together with many of them, it will give a very strong opinion about what the people think about that stock. So last time we did the, this was funny. An American market adage contends the amateurs open the market and the professionals close it. And yeah, we have learned from experience. It's interesting, if you're looking for like long-term trading and things like that, often the first 30 minutes is not a good place to be.
Yes.
But if you're doing day trading, that's exactly where you want to be, because it's likely that it's going to be fluctuating. Would you agree or not necessarily? Or are you also wary of the first 30 minutes?
I'm there are a lot of like movements in the first 30 minutes. As I would say, as a beginner, I used to do I used to think like, this is a way. It's like you should be very quick and do, but I now realize that it's not working for me. I have to wait now wait for the opportunity and see like which is giving that nice pattern and wait for that 30 minutes to go on, like to make
So
form
you
the
use
pattern.
those
Yeah.
30 minutes to really come up with your strategy for the day.
Yes. Yeah.
Okay, got it. So, and it's saying here, so this chapter was just about the structure, as you said, Bhavya, of the candlesticks. But in the next chapter, we're going to discuss the early indicators that the trend may be changing. But before we do that, we'll do the quiz again like we did last time,
Yeah.
which was fun. All right, what is the rectangular portion of the candlestick called? John Wick. No, the real body.
Yeah. That's
What
right.
is the thin line above the body? We know that is the upper shadow. The upper shadow of a black candlestick represents the range between the sessions. Okay, it's clearly the high and the close. Should be the, wait, doesn't have high and open, low and close. Wait, the upper shadow. So if it's a black candlestick, that means it opened high and closed low.
Close eye.
A black candle line? I thought that meant it closed low.
No, it's
like
upper shadow, right?
I think it's
upper shadow.
about,
eye is always the same in whether it's a black or eye and
no, but I know, but it's saying a
he's
what
saying
does it say? Of a black candle line.
Yes, you see upper shadow of the black candle line. So she's close and the eye, right?
No, but it's the open. The top part is the open.
Oh yes. Sorry, it's going down.
Just to be clear, open.
Okay.
But that answer is not there. I said, oh wait, maybe is it high and open? Oh, there it is. Okay, high and open. Got it. A lower shadow of a white real body candlestick represents the range between the sessions. So it's the opposite. If it's the white real body, that was, I'm trying to think, that means it opened low and closed high. So that's also the open at the bottom.
Yeah.
So the lower shadow is the range between the open and low. So B.
Open and close, I think.
It's the
low, sorry.
exact opposite of what we're saying there.
Yes, yeah. Right.
Can I tell you this? It's honestly, I honestly think the only reason you're having trouble with this is because of the language.
Yeah.
And because I know you know this better than me.
Right.
And but I was just thinking, like, if I were doing this in Chinese or something like that, or in French, it's hard enough trying to understand the concept, but then trying to do it the language. A black real body on an hourly chart.
Okay.
All right, so a black real body means it opened high, closed low. So on an hourly chart, it means the hour. The open, no, it's not B. Open and close were the same. C, the close of the hour was higher than the open. No. So it's A. The close of the hour was under the, wait, no. The close of this, no, this one, B. The close of this hour was lower than the open of this hour. Yes?
Yes.
Okay. 6, on a daily chart, a white real body means that today's, let's see, a white real body means that today's open was lower than the close. So, or close is higher than the open.
Yeah.
Close is higher than today's open.
Open,
B.
right.
Yeah.
B.
7, what portion of the candlestick do you think is referred to as the essence of the price movement? The essence. I would say the essence is the real body.
Yeah.
Yeah, okay. The last hour and close of the stock market are important because this is when the time mark, when market participants from individuals and such may close out existing positions or open new ones. No, because anybody can do that at any time.
Yeah.
Right? Fund managers switch sectors, probably not, maybe they do, but not always. Traders with short positions cover them. That sounds could be right. The closing
Yeah.
bell on the New York Stock Exchange is rung by a prominent person. So I guess it's C, but I'm just
Yeah,
trying
you're
to
right.
think.
Yeah.
So traders with short positions cover them. I'm just thinking, why would they have to cover them at the end of every day? I thought it would just be like
Maybe
on
it's a 1 day if it's a 1 day time frame.
a short position. So they sell short. Oh, I guess because when you sell short,
Mm.
you never want to have money in the market at the end of the day, because then when it opens in the morning, maybe there's a problem, or maybe that's just maybe short positions have to be closed at
Has to be. Yeah,
Let me see.
most. Yeah.
Do short positions have to be closed at the end of each day? There's no standardized for how long a short sell can last.
Mhm.
When day traders don't close positions at the end of the day,
I think there is a
people-
concept of short interest. So more you keep the day's interest
oh
free,
yes, that's
something
just
like
true,
that.
because yeah, you're paying on that for because you're not using your own money.
Mm.
Good. Traders sell short when they expect the stock's price to decline. You need a margin account, we know that. You sell a borrowed security, which leaves a negative share balance that's maintained in your as a short position. To close it, you buy it back. Let me see. Short shares, XYZ at $20, total proceeds $2,000. Stock price drops to $15. Client buys back the 100 shares at 1,500. You make $500. Okay. Hard to borrow. How does a short sell work? We just want to find out. All right, so it doesn't. When do you have to buy the shares back? There we go.
Mm.
There are no regulations that limit the amount of time a short position can stay open. However, the following conditions may cause a short position to be closed out.
Okay.
Shares are no longer available to borrow. You have to recall this trade without notice. If the shares are recalled by the margin lender, okay. There's an existing margin call in the account. What are the margin requirements? Okay, that's at Schwab. Managing risk. All right, so I guess it's not a definite.
Yeah, it's not definite. Yeah.
Wait, so then maybe the answer is A.
Mm.
This is the time when market participants, from individuals to institutions, may. Oh, it says no, but this says may, but you can do that at any time. I don't know. I just find that because traders with short positions cover them. I don't know. Do you know the answer for sure? Do you remember when you read it?
I don't remember, but I feel it's A.
I'm thinking now it's A2 after we just
Yeah.
read that, because it says may here. Here
May,
it
yeah.
says cover, this means they always do it. We know they don't always do it.
Mm.
Okay, so let's go with A. And using the data points in Exhibit 1.2, draw the candlestick lines. So here, wait, let me see. Could we do the drawing here? Annotate, draw. So this first one,
Mm-hmm.
let's see. We'll do there's the stick.
Mm-hmm.
Okay, and then this one would open at 23. Well, we have to find out first, did it open or close high?
Yeah.
So let's see, it opened 23, so it went up, so it's going to stay white.
Mm-hmm.
And here we'll make another one that could be the black. There, that'll be that's one that we filled in. So 23. So we could just don't have to actually draw it. So this one would be 23 here.
Yes.
And there'd be no shave. There'd be no tail.
No tail, yeah, no shadow.
No shadow.
Yeah.
And then the high is 28's up here. Oh no, whoop. the high.
Close
So
is 24.
here is the high. That's what we should have looked at. The low and the open and close. Not the, I looked at the open and high.
Okay.
So the open was 23. So this would be 23 here, 24, and then 28.
Right. That's right.
Okay, let's look at the next one. Let's just look at one where it opens high and closes low.
Low, yeah.
Open.
The second one is
yeah. So 30. So this would be 30 and
I also
27 at the bottom. There'd be no shadow, upper shadow.
No upper shadow.
And the low will be here, 24, and then down here. No, wait. Excuse me. This will be 24. Wait.
27.
Wait.
Second one, right?
And 20. This will be 27 down here.
Yes. Yeah.
And then this will be 24.
That's
right.
right.
So we did that one correctly. Good. Clear all drawings. Good. In exhibit 1.3, for line X, area 3 represents the
line X, area 3. Okay.
Let's see. That is the open close. That's the
close.
Yes, I agree, because it's white, so we know it closed higher. And so that means this must be the close.
Yes.
And in exit for line Y, where area 3 equals, now we know that's the open.
Right.
Right, because it's black, so it closed down at 2. All right, answers. The rectangular section is called the real body. We got that. The shadows, we got that. When the real body is black, it means the close of the session is lower than the open. We got that. Okay, same thing. We got 4 correctly. Higher than the open, 5. A black real body means the session closes under the session's open. Okay, we got that.
Okay.
6. A white real body means the current session's closes higher than the current session's open. Which one was 6? On a daily chart, yeah, that was easy. Okay, 6. 7. On Japanese charts, even an individual candle line has meaning. Therefore, one of the first clues is the size and color of the real body. The Japanese, the real body is the essence of the price movement. We got that.
Right. Yeah.
Good.
Yeah. 8th one, we had a confusion. Yes.
The close is a time of major commitment. The closing, it is A. The closing price is used for many important calculations. The close is the time when the market participants decide whether to close out positions, hold current ones, or open new ones. Okay, 9. Those are the drawings. Okay, yeah, so we did that correctly. Those look like ours. 10, a white real body means the close is above the open. We got
that. Yes. Yeah.
All right, so I didn't read this one yet, so we'll read this one together and then do the quiz.
Right.
Basic market strategies. Take a drink. I find going over it together and doing the quiz together, it actually, and just talking out with you, it actually helps me. Do you feel it helps you a little bit?
Yes, it helps. And it's like, especially, some of the points, short points where you mentioned, like it's May. I'm gonna not realize that all those small points that really helping me to, do the more understanding.
Yeah, it's good. And it's good if you're learning something new too. If nothing else, even if it's, I know I've already read this, it's a good review, right? And
it's
just like with our coding, it's like you can always review.
Right. More you review, you become like subject wise, you become more comfortable. So it's like really good. Yeah.
We can say that the more you become a subject matter expert. SME.
Yes.
Okay, early recognition of potential trade reversals is one of the most important skills we can cultivate. As we study candle charts and learn to recognize the patterns, we'll appreciate how candles offer a heads up on trend reversals. Most signals given by candle formations are reversal signals. Candle charts often display reversal signals in a few sessions rather than over the long period of time needed for bar chart reversals. Great. Using candle charts, you'll identify market turns quickly, so we can enter and exit the market with speed and accuracy. We're going to discuss these trend reversals and those roles, and how concepts that are inherent to these changes and reversals, support and resistance levels, and all important breakout and price closes. So we're going to learn how candles play a role in that.
Mhm.
Patterns, importance
Yeah.
of confirmation, why the closing price plays a key role in breaks above and below resistance and support. Key terms: trend reversal, uptrend, downtrend, consolidation, support and resistance, retracement, and box range. I've heard of all of these 5. I've never heard of retracement or box range, so that's exciting. Let's just see how long this chapter is, because I want to see how maybe we'll have to break it up into 2 sessions. I don't know how far. Oh no, it's not that long. Great.
Yeah, that's awesome.
Wow, we're going to learn all of that in just 3 pages. This is great.
Yeah.
Okay. The ability to recognize a potential trend reversal is one of the most important skills you can cultivate. The ability to read candle lines and patterns will increase that skill many times over. So we're going to delve into specific candle lines and patterns and the signals. Now we're going to get a top-down overview. So a Japanese proverb states, darkness lies 1 inch ahead. You need only watch the financial television networks to see the great degree of importance traders and investors place on foretelling market tops and bottoms to arrive at an early insight on upcoming moves. As you know, the common goal is to buy low and sell high, or in the case of shorting, selling high, buying low. On charts, Western trend reversal patterns include double and triple tops and bottoms, key reversal days, head and shoulders, cup with handles, and island tops and bottoms. You know, it's true. I read a bunch of books by Investors Business Daily, and one of their main things is the cup with the handle. But those cups with handles, they take weeks to get established.
Weeks? So
Like,
we can't find the pattern in 1 minute or in a minute chart?
not one that's supposedly going to give a long-term projection on what the stock is going to do. And so maybe this cup with handle is more useful for long-term purchases, but for day trading, not so useful.
Might be.
Although market cycles of alternating uptrends and downtrends interspersed with peaks and valleys are inevitable, you should remember that trends don't always end abruptly. In fact, trends usually occur slowly in stages as the psychology shifts. The trend is your friend. Successful trading entails staying on the right side of the trend, but this is easier said than done. Trend change or reversal signals are the market's warning. It means market psychology is information, and you need to adjust your trading style to reflect the environment change. For example, if you see a reversal signal, you might consider initiating a new position only if that signal is in the direction of the major trend. So your stock has been climbing in a strong uptrend. Then it either consolidates sideways for a few sessions or moves down, retraces. At this time, you get a bullish candle signal. Since the major trend has been up, one can use the bullish candle signal to initiate a long position. A bullish candle signal in a bear trend should be used either to cover shorts or as an alert that the market may rally. Okay, key point. When I say bearish and bullish reversal, it does not imply the market will reverse. It just means the market has gone from up to neutral or from down to neutral. In other words, with these reversal signals, the odds of a turn have increased but are not assured. So in other words, that's why, just because if it's going down and then there's a candle that ends white, that alone is not a signal that it's going to keep going up. You need at least 2 candles. Is that right?
Not exactly. I think it's like some of the reversal, if it's a bullish engulfing pattern, and also for some
Patterns,
like candles, yeah, you need the confirmation. Wait for the next candle. But for some like bullish engulfing, if it's a like downtrending and there is a suddenly large white candle, that means it's going up now. So
okay, got it.
yeah.
So it depends. So trend reversals or shifts are a modification in market psychology. In a strong uptrend, such as in exhibit 1.5a here, the bulls are in control. Shoulder to shoulder, optimistic bulls turn out in force, buying available supply and supporting ever rising prices of stock XYZ. When a retracement or a sideways consolidation occurs, as it does from 1 to 2, That's a retracement. Aha. The bulls stand aside, tucking their shares in their pockets. The stock rests for a time, then resumes its climb upward. 3 shifts in psychology took place during each of these 3 movements in stock XYZ's strong uptrend. Just thinking about this, my cryptocurrency holdings have gone in half in the last 3 weeks. They were up so high, and I was debating, should I sell? Should I put in the profits? And I did a little bit. I think we talked about this, Bobby, and I sold some of my Dogecoin. So I made some profit off of it, but I'm looking at it going, ugh, how annoying that I lost 50% of what was remaining. But but the question is it this? Is it B or is it A? Where it's just gone down a little bit, and then in the next 3-4 months, whoop.
Yeah.
If you look at Dogecoin and Bitcoin, it constantly does that. It goes up and then it drops like in half. Then it goes up and then drops in half. So I'm not going to sell it now. I'm just going to. I've lost 50% of the profit. I didn't lose money. That's the most important thing. I didn't lose any money. I still have a profit. But it could have been more.
It's a long term. I think it should not be. You should not be.
Yeah, I think long term it'll jump back up again. So that's a retracement, and then the stock rests for a time, then goes back up again. In 1.5B, the same thing happens at first, but then the market tops out at 3. But we don't know it's a top until a few sessions later when the stock descends.
Right.
With those long positions may have taken some or all their profits, but this time the retracement turns into a trend reversal. Barely. So if it just starts going down 1 or 2 or 3, you don't know that it's a downturn yet. It could just be a retracement. And you don't know if it's a downturn until you confirm that trend when you see maybe a 4th or 5th. Keep going. Points 1, 2, and 3 and 1.5 are reversals. 1, 2, and 3 are reversals. They all are reversals. Oh, interesting. Each one is a reversal, but this is called a retracement because it's not going down completely. This is called a downtrend.
Yeah.
And this is an uptrend here and
uptrend.
Okay. The candles will be the first clue of a change in trend. Okay. Besides scanning for possible trend changes, another critical component asking, what is the support and resistance? And you always talk to me about that, Bobby. Support and resistance on a chart can take many forms. It can be a prior high or low, depicted in a price level or pattern. It can appear as a Western indicator, such as a trend line, moving average, or something as basic as the most recent high or low. We know that a market often tops out at or near the same price range at which it pulled back at a previous time. A market tops out at near the price range, but it may also fall to a prior low price, then bounce off of that support level. If a candle signal confirms a support line, it would increase the potential bullish implications of that signal more than if the candle signal did not confirm support. Let me read that again. If a candle signal confirms a support line, it would increase the potential bullish implications of that candle more than if the candle signal did not confirm support. Conversely, if a bearish candle signal emerges at a resistance zone, chances of a turnaround have increased.
Right.
As such, the rule is that the more technical signals, whether candle, Western, or a combination, the more likely there's going to be a reversal. So example is 1.6, okay, in which a bullish candle signal called a hammer, discussed later, confirms a support line. So just looking at this, that means it started low, it closed high, but in the middle, it went down to the support area and then bounced back up and landed higher.
Yeah.
So that's why they're saying that that could be that confirms a support line for whatever reason. He doesn't get into why. But okay.
Yeah, it's on a downtrend. Yeah, where he did the arrow line. It's in a downtrend trend, and again, bears they try to put the price down, but it reached the top put. When bulls again pick the price up.
Mm-hmm.
Mm-hmm.
Now here he's saying that it's most likely a reversal. So is this confirming the support line and saying, hey, the price is probably going to be going up now?
Yes.
Interesting. Okay.
Yeah, that's a
No,
hammer is, yeah.
Go ahead.
No, hammer is usually like, see, here we get the double sub confirmation. One is a hammer itself, like when it's in a downtrend, if you get this pattern hammer, that means that there is a reversal and it's going to it can be either sideways or a bullish trend. But here
But it's
we have
likely
a
not
double.
going to go lower.
No, yes, because we have a double confirmation. One is the hammer and there's a support area.
Hammer and support. I can see how if you want to be a good day trader, you need to know these candlesticks. If you don't know these candlesticks, you're just guessing.
Yes.
So, all right. In section 1, we talked about the importance of the daily close. Let's take it a step further. Like most technical analysis, the Japanese place great emphasis on a closing price, especially if the price closes above resistance or below support. Think of it this way. If a stock closes above a prior high, it means participants are willing to pay more for it right then, and they're willing to hold it overnight.
Okay.
Interesting. If it closes above a prior high, it means they're willing to hold it overnight. It means they're committed, and commitment is an extremely important factor in the movement of the financial markets. An intraday break of support or resistance does not have the same significance as a severing of support or resistance on a close. Got it. So let's say you're studying a daily chart of a stock. Actually, let's go into this first.
Yeah.
In the context of support and resistance comes a simple and powerful technique that I've called the change of polarity principle. It applies perfectly to a core principle of technical analysis. Old resistance becomes new support, and old support becomes new resistance. Yes.
Yeah.
Although this term is not generally applied to the concept, I believe it describes it well. On a chart of any time frame, you can often see how that once a market breaks over a multi-tested resistance area, the prior resistance area is now converted into new support. In contrast, markets that fall through prior support have trouble climbing back through it again, since that previous support is frequently converted into resistance in 1.7. So that's, again, why it's so important that we look at support and resistance, because it's basically showing you where it helps to confirm the trend.
Yeah. Confirm the trend. Another thing, it's like, as once you know the trend, like price target. Usually traders see, I'm the beginner, we do just go with the trend, but whoever the experience that they even target the price, it will, yeah, my price target is, selling target is this one, and buying target. So that you will find with all this resistance support area, finding the resistance and support area.
Is that part of your daily, is that part of your analysis of every stock? You're always looking for support and resistance?
I'm not at, like, I'm still learning, so I'm not, there are
Okay.
many ways, yeah, to find, I'm really finding like how to find that support and resistance area. So I'm still learning about that, yeah.
What I just realized is that depending on your time period of the chart you're looking at, there'll be a different support and resistance price.
Yes, yeah.
So if you're looking at a daily chart, you'll have a support and resistance for the day, where or for that moment in time. But the support and resistance, if you're looking at a monthly chart, it's going to be very different.
Yeah, that is right. For example, I think, yeah, this week now it's like in a minute candle, it's like some of the price is like constantly coming there, and 4 bars is constantly coming to that price level and again going up. And so I sometimes keep it that one as the support area and wait for the other signal like Western MACD, RSI, how it is moves. And then depending on that, sometimes, yes, I go that, yeah, as it's supporting here, I have to buy here. So I do that one sometimes. It most of the time, I think this week, yeah, I think last week it worked that way. So I'm learning and doing some of the, still analyzing and
Yeah.
finding way.
You know
Yes.
what it is? I think we're all always learning, right?
Yeah.
Yeah.
We should not never stop
never
learning.
stop. All right, say you're studying a daily chart of a stock. Imagine it moves sideways in a basing mode between $40 and $50 for the last 5 weeks or so. Suddenly, the bulls wrest control of the market and the stock closes at 53. Do you see how important that closing price is? It means people are willing to buy and hold the stock at a higher price. The market has established new demand for the stock. Yeah, why would they buy it at 53 if they didn't think it was going to be going higher, or it was that was at least the value of that stock? It was worth 53. Conversely, if a market trades sideways in a box range, as the Japanese call consolidation patterns, for some period of time, then breaks down to close below that support area, means buyers were unwilling to step in and hold the price at that level. The bears are in control. The market may fall to lower prices. But if a sessions candle broke price support by dipping below it, but then closed inside the box range, that is not as bearish. This sort of session tells you that buyers are stepping in before the close, and demand was strong enough to push the price back into the prior box range by session's end. Now you understand how valuable tool a candle formation is in the context of trend reversals, along with components inherent in those reversals, support and resistance. In the next section, you'll learn about spinning tops and doji.
Yeah.
We'll also discuss additional market psychology. All right, let's do a study.
Yeah.
Okay, which is most true? Not A.
Most standard signals are reversible.
I think it's B. Most are reversal signals.
Correct. I agree. Yeah.
Okay. Candles charts provide D.
Instead, the momentum may be changing, right? Instead of a false breakout.
Meaning it looks like it's going high, but and higher, but it's not actually.
Okay, yeah, then all of the above. Got it.
I think D. I don't know. We'll see.
Yes, yeah.
Which of the following tools can be used on a candle chart? So a moving average could be, definitely.
Volume, yes.
I don't know what an oscillator is, but if it's A and B, then it's got to be D.
Yes, that's smart, yeah.
In candlestick trading, when we talk about a break of resistance on a daily chart, we mean
break of resistance. Okay.
Yeah. We talk a break of resistance. We mean
close above resistance area. Yes.
Yeah, it's got to be a close above. Oh wait, yeah, because it's resistance, so it's the top.
Yes.
Support and resistance. Good. A box range is the same as in Western is I would think, just based on English, lateral.
Yeah, I agree.
Which means kind of across, sideways.
Yes. Yeah.
Which is false. Candle charts are best used as a standalone tool. A, because he said
false.
You should use it with Western techniques and whatnot. Okay. So we often send out reversals. Let me see, just make sure we're doing it right. B, we said reversal signals, yes. Okay. Among the major advantages of candle charts is we can use individual candle lines to obtain reversal signals as little as 1, 2, or 3 sessions. A small real body or doji at a new high could give us a little clue that the bulls are not in complete control. Good. 3. Let's see. We said D.
Yeah.
Yeah, let me just go D and We did
A.
4. So
A. 4.
DAC. We did DAC. So DAC. Good.
AC, yeah.
One of the powerful aspects is they use the same data as bar charts.
Mhm.
All Western bar charting techniques and so on can all be used on candle chart. To most effectively confirm a break above resistance, I recommend a close above a resistance area. To
Mhm.
confirm a break of support, I like to see a close under a support area. A box range is the same as lateral or consolidated trading environment.
That's right. Mhm.
Look at 6.
6.
6 is the last one, which is false. Candle charts are
A.
best used. We said
We
A.
said A, yeah.
A candle chart
Yeah.
is most potent when combined with other technicals tool. Let me just check one thing. There's a French event in 5 minutes. Let me see if anybody signed up for it. And
Okay.
if not, we can just continue. We'll do one more chapter.
Okay. Sounds good.
I want to.
I think it's
learn.
yeah. Next chapter is we'll see. Yeah, it's nice.
And yeah, no one signed up for this one. So okay, the German chat. I think we've got a bunch of people. Let's see.
Oh, again today there are 3 events today. That's
Yeah, I don't know
really
how,
great.
I don't know how that happened. And we have a new member from India and Canada. Okay, so let us go back and
Yeah, I really like that it's up to the point explanation and then a quiz.
this book is so well done. By the way, I misread chapter 1 as chapter 2 because we did last week. We did the introduction.
Yes, we did.
Which I thought was chapter 1. So anyway,
okay.
All right. So we'll do this. Let me. Is this a short section too?
Let's see.
Oh, it's a little long. We'll see.
That's what I think we can cover in next 15-20 minutes. Mostly.
Yeah, I think so.
Yeah, then fine. Yeah.
All right. Spinning tops and high wave candles.
Mm.
Also, it's more fun doing it with somebody else too. It's nice to discuss it. We can really reinforce the concepts.
Right.
We're focused on single candle lines. One candle is a candle line. Section 1 focuses on spinning tops and high wave candles. Section 2 reveals the potency of the doji. In section 3, we'll explore bullish and bearish belt hold lines. Many candle signals consist of 2 and 3 candle patterns, but we can obtain volumes of valuable information from single candle lines. Don't let the simplicity of single candle lines fool you. They send compelling signals as to who's winning the battle between the bulls and the bears. In this section, you will learn, you know what, I'm just going to, just in case someone does show up, I'm just going to go to the French chat room and make sure that sounds like. Okay. So we're going to learn about market psychology through small real bodies and long shadows. We'll learn about spinning tops and high wave candles, how to use spinning tops and high waves in a box range, how to identify the hammer and the hanging man, the importance of candle signals in the context of trends. So we're going to learn for spinning tops, high wave candles, hammer, hanging man, shooting star.
Yeah.
Candle charts indicate early trend reversal, but they also have the advantage of displaying the force underpinning the move. Since nearly every candle line is a story to tell about the market's mood and manner, we'll start with how to use real bodies to gauge the force of the trend. You may remember from a previous discussion that the Japanese called a candle's real body the essence of the price movement. Indeed, the length of the real bodies in relation to their shadows furnishes you with unique insights into the psychology of the stock market. Obviously, a tall white real body reflects a session when the bulls are dominant, whereas a black real body shows the bears have greater control. But when the real body shrinks, it's a strong hint that the prior trend may be losing steam. Fascinating. Okay. A spinning top, 2.1a.
Yeah.
is the picturesque Japanese term for a candle with a small real body, either black or white. So the spinning top, there are 4 spinning tops here.
Yeah.
Is that right?
Yeah, spinning when it's a small real body, it's called spinning top, but it's you showed 4 different variation in that. Yeah.
Okay.
Yeah.
Spinning tops may have upper and lower shadows or none at all. So it has nothing to do with the shadows. It has to do with the fact that it's like a little tiny box.
Yes.
So spinning top. The important identifying trait of these candle lines is their diminutive real body. Later, you'll learn how spinning tops are components of candle formation such as morning and evening stars, harami hammers, and shooting stars. All right, for a small real body, the color is not important. The diminutive size of the real body sends out the warning signal, not the color. Fascinating. Right. Okay.
See, spinning top is actually the English word, that one, right? Which usually cuts just a play.
Say it again. What?
Spinning top.
What about it?
I've heard that it's a toy, like what they say, it's they spin and it's.
Oh, you're wondering what a top is?
Yeah, that spinning top. Yeah.
Yeah.
Yeah. Okay. Yeah.
It's like this, but it looks like a little box.
Oh, yes. Got it.
And the bottom of it is pointy. So I guess you can think of it as you're looking at the top from the top. Okay, so moving on. A small real body shows that the bulls and bears are battling out in a tug of war, with neither the bulls or bears able to take dominant control. Selling pressure, the bears, pushes the real body down, but buying pressure, bulls, keeps it from being a long black real. That is fascinating. They're both buying and selling at exactly the same time, which is why it's key to look at volume in that point too, right? Because if volume is high, that means there's lots of people buying and lots of people selling all at the same time. So it's keeping the price exactly where it is. Got it. In the other scenario for a spinning top, demand is stepping in, but supply is counterattacking. And in doing so, it keeps the market from forming a tall white candle. Spinning tops have a sort of cousin named high wave candle. So a high wave candles also, they also have diminutive real bodies, either white or black. Okay. To qualify as a high wave, however, these candle lines must not only have small real bodies, but also long upper and lower shadows.
Yeah.
So that's why this is a high wave candle. So the reason this is a spinning top, this one, is because it's because it's a shaved top. The reason why this one here, the third one, is a spinning top is because the lower tail is short.
Yeah.
And the reason why this one is a spinning top is because it has upper and lower tails, or shadows, you call them. Upper, I guess they're the same, right? Tails or shadows?
No, I think another word for shadows is wicks. Yeah.
Shadow.
They call it, yeah.
So this one has an upper and lower shadow, but they're not long. So it's still a spinning top. So in order to make it a high wave candle, you need big upper shadow and big lower shadow.
Right.
Okay. So they don't need to be the same size, but they have to be unusually long.
Okay.
Okay. Got it. If spinning tops, let me just check. No, nobody's there. If spinning tops translate into indecision on the part of the bulls and bears, high wave candles indicate downright confusion. Interesting. Spinning tops is indecision.
Indecision.
High wave candles is downright confusion. I think I'm going to write this down too.
Yeah, writing it down. Yes.
That's good. I think that's a good thing if we can create notes for every one of the different patterns and just have a very short, like 3 words. What does it mean?
Yes.
So a spinning top.
Yeah.
Is indecision.
Indecision.
and a high wave candle equals total
Confusion.
confusion. Got it. Okay. As you can see by exhibit 2.1b, that was up here,
Mhm.
the long upper shadow means that sometime after the session's open, the buying pressure thrust the security's price to an extended high. But during the same session, selling pressure drove the price to a protracted low, yet by the session's close, the price returned almost to the opening price. That is confusing. Interesting. Now take spinning tops and high wave candles in the context of an uptrend or downtrend on a chart. So let's just see. So yeah, if we see a spinning top or high wave candle, I'm just guessing. Let's say we have an uptrend, right? And then all of a sudden we have a spinning top or a high wave candle. That's showing, okay, that something's going on with that uptrend.
Right.
And it might continue to go up, but it might start to drop. So
be cautious.
Yes, be cautious. So let's see if that's what he says. And in a solid uptrend, a market might rise, but the shape of the candle lines during the ascent is an important clue about the sustainability. Long white real bodies are like a green light, showing that the prior rally is going strongly. But if there are small real bodies, white or black, during an ascent, caution is warranted from the long side, because the small real bodies may imply that the bulls have less than full control in spite of the advancing prices. Such spinning tops are a warning not to follow this market from the long side. Spinning tops become even more consequential in a market that is becoming overextended and perhaps nearing resistance. A trend shift or reversal may be in the offing. So let's look at the key point. The high wave candle has the name because the Japanese compare the very extended upper and lower shadows to large ocean waves. Once again, we get a sense of the pictorial representation the Japanese give to the names of the candle signal. Okay. Now, conversely, if you see spinning tops moving sideways in a consolidation pattern, they are not signaling a trend reversal or shift. The market is simply resting until it breaks up or down from that price zone. As such, spinning tops and high wave candles have no trading implications within a box range environment. Okay. Yes, because the market already is kind of confused anyway. They don't know what they're doing. So 3 candle lines that contain spinning tops are the hammer, the hang. Oh, the hammer, hanging man, and shooting star are forms of spinning tops.
Yes. But it's named when depending on where it comes. Hammer comes in after downtrend, and hanging man after uptrend. Even shooting star is after uptrend.
Hammer, hanging man, and what's the other one we just read about?
Shooting star.
Okay. 3 candles that line. Okay, the hammer, the hangman, and the shooting star. These candles are shown in exhibit 2.2. Let's first focus on the hammer and the hanging man, since they have the same shape. We'll then address the shooting star. I see. It depends where they happen. And now you do have to look at the tail.
Yeah.
Okay. The hammer and hanging man. Okay, they're the exact same thing, just in a different position. Have small real bodies, black or white, and these real bodies have to be at or near the highs of the session. The session, meaning the candle.
Yeah.
So this is the session right here, and then this is the session. Another criterion is that they need very long low shadows, at least 2 to 3 times the height of the real body. Because of their identical shape, you identify them depending on where they appear in an uptrend or downtrend. Okay. As you can see in exhibit 2.2a, a hammer will appear at the bottom of a decline. Okay. And
Bottom of a decline.
which suggests the market is hammering out a base. Oh, that's a good way to think about it. Boom, it's hammering out a base.
Yeah.
Okay, the hanging man has the same shape as the hammer, but it comes after an uptrend, preferably at a new high for the move. Oh, I see this. Up before a second, wait, it said have to be at or near the high of the session. Okay, yeah, never mind. Okay, because of the hanging man's bullish long lower shadow, one must made for a close under the hanging man's real body before becoming bearish. A close under the hanging man's real body. So then that means in the next session.
Yeah, next session. You should wait for that
If
confirmation.
the close is below this body, then okay, things might be becoming bearish. And what how do we know about the hammer? The hammer, all right, the hammer is hammering out a base. Okay. With the hanging man's bullish lower shadow, one would think that this line can only be bullish. Although the bullish shadow is a positive, the hanging man's, well, let's look at the hanging man, the bullish lower shadow. Yeah, bullish lower shadow. Okay, yeah, this looks like it's going up.
That's why we should wait for the confirmation.
So although the bullish shadow is positive, the hanging man's small real body shows that there's some hesitation. And the long lower shadow, while it's a plus, shows that at some time during the session, the market had sold off. Okay. The shooting star is a top reversal line. Okay. So if you see a hanging man followed by a shooting star, that's trouble.
Yeah, right.
And its small real body is at or near the low of the session. We can see how the name describes the line as it appears to be a shooting star complete with a long tail soaring across the sky. They say that that's trouble overhead. Because of the long bearish upper shadow, we don't need as much bearish confirmation with that line as we do with a hanging man. Oh, okay. You may get a shooting star after a hanging man, and that would confirm. But if you just get the shooting star by itself, that alone is a good signal.
Yeah.
Okay.
So
star is a bearish reverse. The real bodies can be white or black, doesn't matter. So with all of these, it doesn't matter if these are black or white, correct? Or does the hammer have to be, do the hammer and hanging man have to be white?
No, it doesn't matter. But
a shooting star tells you that the market is rising in an uptrend and is perhaps becoming overbought. Finally, the bulls refuse to pay anymore. The shooting star forms as the session opens at or near what will turn out to be the low. It rises, but the bulls cannot sustain the demand. Bears come in and drive the price back down. A long upper shadow on any candle means selling pressure. A long upper shadow on any candle. So there's upper shadow. On any candle means high selling. So, all right, if you see a high tail, a high shadow, that means there's people are selling. If you see low here, low, it means there's buying pressure.
Yeah, right. So as a candle itself, it's like when it's a lower shadow and body is on top, that's the bullish. And yeah, whether it's a black or depending on a black or white, it doesn't matter, but it gives more like confirmation if it's like in the like downtrend with the hammer with the white body, it gives more confirmation saying that yeah, it's going to reverse. It's going to reverse to the bullish pattern.
Got it. Now, can you have a shooting star at the bottom of a downtrend?
Shooting star. Oh, that is called, they continue. That's called it comes with a morning star. So that's a different topic.
Oh, that's
Yeah,
something.
that is, yeah.
We'll talk about that later.
Mhm.
Okay. The Japanese have an, wow, we're already at the end.
Yes.
The Japanese have an all-encompassing description for candle lines that form with long lower shadows and reals and small real bodies near the top of their range, umbrella lines. Have an all-encompassing for candle lines that form with a long lower shadow and small real bodies near the top of their range, like this, right? Is that correct?
Again, I want to read that. Yeah, Japanese.
Form with long lower shadow
Lower shadow, okay,
and
small
small
real
real bodies near the top of their range. Yes. So
umbrella lines.
a
Okay,
hammer
yeah.
and a what was the other thing called? A hammer and a
Hanging man.
hanging man. The
Mhm.
hammer and the hangman are umbrella lines. In one Japanese book, there was a line that looked like a hammer. The text related to this figure said, "Buy from below and sell from above." As with most candlestick wisdom in the original, this text required some mental gymnastics. I finally deduced that the author meant that we should feel bullish with a hammer-shaped line after a falling market.
Mhm.
So here,
Mhm.
and we should feel bearish after a rising market, sell from above. Deciphering the secrets of the Orient presented a real challenge. So this is when you should buy.
Yeah,
This is when you should sell.
right.
Okay.
Hmm.
And
Okay,
the shooting star is this, where are we? All right.
yeah, last.
Shooting star tells that the market is rising and an uptrend is perhaps becoming overbought. Okay, the shooting star forms the session open near, oh, we read this before. Bears come in and drive the prices back down. As you learn, and again, a long upper shadow on any candle means selling pressure. As you learn and review the candle formations, you can see how each candle line tells a story. With small real bodies indicating indecision, long real bodies show definite opinion. And buying and selling pressure being revealed by lower and upper shadows. It's no wonder your skill at reading a candle chart will add to your success as an investor, trader. So in section 2, we'll talk about a candle similar to a shooting star called a gravestone doji. Its appearance in the context of an extended rally is more menacing than that of a shooting star. In matter of fact, doji in general broadcasts extremely important signals. For now, let's just read this.
Yeah.
Okay. So we'll finish this up, make sure there's nobody there. Nope. Okay. A long lower shadow. A long lower shadow on a daily chart shows that, let's see, the bears are in control. The market bounced from its lows by the end of the day. I think it's either B or D. I think maybe B.
I think it's B, yeah.
Or is it the bears are in control?
No,
No, they're not
completely.
because
Yeah,
it bounced back up.
Yes, it's not there
So
in control. Yeah.
The market bounced from its lows by the end of the day. The blank is another name for a small real body. We just learned that, spinning top. And to be considered a spinning top, the real body has to be black or white.
Black or white, yes.
Okay. What statement best defines a high wave candle? Very long shadows on both sides.
Yes. Longer and upper.
Long upper and lower shadows, see?
C, yeah.
What does a high wave candle imply? There's a complete confusion, yes.
Confusion, yes.
Market is confused. Which of these are essential for a hammer is a downtrend?
Yeah.
Let me see, both A and B. Do we need B, a long upper shadow? No, we need a long lower shadow.
Lower shadow, yes.
Which statement best describes a hammer? The high has to be near the close of the session. I'm not sure. The lower shadow should be no more than 1.5 times. We didn't talk about 1.5 times. It must appear in a lateral, no. So it's got to be A then.
Yes.
The color of a hammer's real body is either black or white.
Right.
What differentiates the hammer from the hanging man is the position of the shadow. No.
No.
It's whether it's an uptrend or downtrend, right?
Trend. Yeah.
So let's see where that is. Oh, the trend.
Yeah.
Yep. The trend. Great. Use the following list to answer the 2 questions marked A and B below.
Okay.
Okay. From the list above, choose the 4 criteria needed for a hammer.
Hammer.
Okay, so let's find those. So
B.
I'll find 2 and you find 2.
Okay.
So hammer. For hammer, market is in a downtrend.
A, B, and D.
B, you did D, a longer lower shadow, 2 or 3 times the height of the real body. Okay. D,
G.
more. Either black or white real body, and I'll do the last one.
Okay.
Let's see. Oh, wait. B, market is in a downtrend.
We did right, B. One more is there.
Oh, let me see. A long way. Little or no upper shadow.
Right.
Okay. From the list above, choose the 4 criteria needed for a shooting star.
Shooting. Okay.
Shooting star is, I'll find 2 and you find 2.
Market uptrend.
Market is in an uptrend. Little or no lower for shooting star, little or no.
That's right.
Lower shadow.
Right.
Find one more.
Again, G, either black or white.
Black or white real body and a long upper shadow at least 2 or 3 times the height of the real body.
Right.
Okay. Oh, he's got a lot more questions. I'm exhausted. It's a tough test.
Interesting test.
Why does a hanging man need extra bearish confirmation?
Why does hanging man? Okay, because it's a bullish signal since close near high of the session.
Because it's the close of the high of the session.
Yeah, A, I think.
I think A too, yeah. What does a hanging man need for confirmation?
I think maybe D, both A and C, because of its long lower shadow as well, because lower shadow means hanging man extra confirmation.
Bearish confirmation. Yeah, I'd say, yeah, I think that's important too. What does a hanging man need for confirmation? During the next session, so hanging man, we're trying to see if it's going to be turned bullish. So an opening under the hangman's, close right there. During the next session, close under the hangman's close.
Right.
Oh my gosh. Oh my gosh. So many questions. Oh my gosh. He's really testing us.
Yeah.
Okay.
We did well.
Which candles have a one-sided shadow? A hammer does, and a shooting star.
Right.
So B and C.
Both, yeah.
What do you say for 14?
Shooting star as a dash real body, black or white. Yeah.
Yeah. Okay, I agree. I'll do 15. Pick 2 criteria for a shooting star. Shooting star means a uptrend. We need an uptrend, and then we need a long upper shadow. C.
Right.
If you combine the yours is 16.
Yeah. If you combine the shadows of the shooting star and a hammer, we would have there shooting star shadow show. Yeah. High wave candle, right?
High wave candle. Yes, I agree. Okay, 17. When you see a small real body at a prior price resistance area, it indicates that market participants are undecided about the paraphrase. I'd say A.
Yeah.
They're undecided.
Mhm.
Or maybe D, maybe B. Must be a national holiday. Okay, you read 18 and you read 18?
Okay. When a stock in a strong uptrend slows and then retraces in an orderly fashion, then forms a candle with small real body, it could mean strong uptrend, then retraces. We can take that chart off your watch list. The recent downtrend will be losing force. Possible longs and possible long trend resume. I think C.
Yeah, I was thinking that too, because if it has if he said it's retracing, which means
Yeah.
it's just one or two. We don't know what, if we haven't confirmed it yet. And then the small real body always means there's some type of indecision,
Right.
right? Spinning top equals indecision. Okay, for
23.
2.5. So I'll do 23, you'll do 24.
Okay.
What candlestick signals are these lines? Okay. So one, oh, okay, this is difficult. What candlestick signals are these lines? So wait, A, B, C, D. These lines. Oh, use exhibit 2.5. Oh, here.
Okay.
What the heck was 2.4?
They not mentioned 2.4.
Oh, we were supposed to look at this for question 18.
Okay.
I don't know why.
But they're not mentioned in that.
No, it isn't. It must be a misprint.
Right.
Okay,
Next.
so good. We can look now. It makes sense.
Yes. Yeah.
What candlestick signals are these lines? So there's an uptrend. There's an uptrend, and then we have a spinning top on all of them. It doesn't matter what color they are, but there's also a long shadow bottom shadow on each of them, which means these are each hanging man's. I say C.
Yeah, C, right. I agree.
Okay,
Which line is, yeah, which line is a sell signal? Oh, which line? None of them. Line 1. I think line 3, because it's more confirmation that since it's a black body. But, or maybe, no, we should wait. None of them. We have to wait for the next session.
Because spinning top means indecision, right?
Right, yeah.
And so we need to wait for one of them to close their body. Yeah. Wait, we need to wait for we need the next body to be below the close.
Below the close, right.
Wait, do we need the whole body to be below?
The close should be below this close. You know, the close should be below that close. Hanging man's close.
The next close should be lower.
Yeah.
Okay. In exhibit 2.6, well, I'll do 25, you do 26. Okay? Yeah. Exhibit 2.6, which of these are shooting stars? Okay. This is really good practice, isn't it? This is difficult. Which of these are shooting stars? So a shooting star means it's got a high shadow and a spinning top. Say, which of these is a shooting star? So definitely, it's not 3 because you need an uptrend. It's not 4 because that is not a shooting star. That is a high wave. Okay. It is not it's not 2 because it's a downtrend. So it's got to be 1. I say it's C.
Yeah, C.
And
2.7, which this is Amos. Okay, for Amor, it's a downtrend, and I think this 3, that is A.
3.
Yeah, because it's you need a long lower shadow, so it has a long lower shadow, but one kind of, but it doesn't have a long lower shadow.
Oh, you're good.
Yeah, because it's
Good.
body.
I thought it was going to be 1 and 3, but there is no 1 and 3. I'm thinking, how can it not be 1 and 3? 1 doesn't count because it doesn't have a long shadow.
Yeah, it's lower shadow height should be at least 2 times of that body. So
2 times. Okay, so let's take a look.
yay, we did it.
We did it. Let's go over the answers quickly.
Okay.
Candle charts illustrate the action between bulls and bears. A long shadow showing on a day's candlestick means the market sold off during the session. By the end of the session, however, it bounced off the lows. That means one of two scenarios. Either the bears retreated or the bulls came back into the market with enough force to overcome the bears. Great. You know what's great about these candlesticks? You actually learn to understand what's actually happening in the stock market with people.
Right.
I'm starting to picture these bulls and bears, what they're actually doing.
Right.
And you can look at the chart and I can actually see like these 2 armies fighting and who's going to win.
Right.
The Japanese nickname a diminutive real body a spinning top. It warns the market may be losing its momentum. 4, if it's at the market is at or near a new high after an uptrend, the emergence of a spinning top could be a signal the bulls are having trouble continuing their ascent. It signals caution. 1 session's small real body doesn't turn the trend from down to up. It just says caution. Okay. The same concept would be true with a series of spinning tops at a resistance area. Such a scenario would show that each time the market climbed that price resistance, the bulls were not able to maintain the highs into the close. This would be a warning signal to those holding long positions. Okay. Spinning top doesn't matter on the color or the length of the shadows.
Yeah.
Candle with a long upper and lower shadow is called a high wave. Good. A high wave candle shows that the market is in a standoff between bulls and bears. When a high wave candle emerges after a downtrend or an uptrend, the Japanese say the market has lost its sense of direction. This lack of market orientation means the prior trend is in jeopardy. 6, the hammer with its long lower shadow and a close near or at the high is easily understood to be a bullish signal. Hammer equals bullish. It also means that a bottom is so solid it does not break, even when a hammer knocks away at it. A hammer gives a potent signal when it appears after a significant downturn or in an oversold market. In other words, the hammer is a potential bottom reversal signal. As such, it needs a downtrend to reverse. Since the hammer is most useful after a significant downturn, it should be noted there may be selling on a rally from the hammer. Therefore, the first bounce after the hammer may fail and the market may return to test the hammer's support. So the hammer alone is not a signal to buy. Or is it a signal to buy?
I think it's better to combine with other things like resistance area or oversold area. Yeah.
As they said, yeah, you should never do it just by itself, but
Right.
it's definitely a signal that it's possible things are going to go back up.
Right.
Okay, the small real body, the hammer must have a small real body at the top end. It shows that the market initially sold off during the session. It shows the market sold off during the session, then bounced back by the session's end. The color of a hammer's real body can be black or white. 3 aspects differentiate the hanging man from the hammer: the trend, the extent of the move before the candle line, and the confirmation. Oh, so a hammer doesn't need a confirmation. A hanging man needs a confirmation. I'm writing that down there.
Yeah.
No,
we should have our own notes. Yeah.
Yeah, I'm saying hey, we could write our own book.
Yep.
No confirmation. So a hammer is bullish, no confirmation needed. Hanging man equals bearish, confirmation needed.
Yes.
Confirmation needed. Okay. And it says extent of the move before the candle line. What are they saying? What look at 9C. Hold on. 9. What's difference the hammer and the so it was.
Yeah, the trend preceding the hammer.
What was the other thing it said about? Look, he said the other thing is the extent of the move before the candle line. Is that
Okay, extent of the movements, like if it's a downtrend, that should be a steep downtrend. It's like another one black candle and then you get the hammer. No, it doesn't. I think it should be a downtrend for a few sessions, then you get the hammer, then it's like
you're
bearish
saying the
signal.
hammer needs more of a downtrend?
Yeah. With only one candle, it's a downtrend, and then you get the hammer. I don't think that's
Let me see.
the signal. Yeah.
As
Extent
such,
of the move.
The hammer is a reversal signal, so it needs a downtrend.
Right.
It's the most useful after a significant downtrend.
Right.
Hammer, significant downtrend.
Downtrend. Hmm.
And hanging man doesn't need big uptrend. You need an uptrend, but it doesn't need to be as big because you need that confirmation signal.
Right.
So I think they cancel each other out.
Mm.
Let's go back up to what he talks about with hanging man. Let's just see. Hanging man. Okay, a hammer will appear at or near the bottom of a decline, either brief or extended. The hanging man has the same shape as the hammer, except that it comes after an uptrend. Maybe it's the opposite of what we just said. Maybe the hanging man needs a short downtrend.
Hanging man.
I mean, hammer needs the short downtrend.
Mm.
The hanging man needs a large uptrend.
Not sure about it.
Yeah, I'm not. So I'll just put downtrend and hammer, downtrend, hanging man, uptrend.
Right.
For now.
Mm.
We'll learn more later.
Mm.
Okay.
Yeah, 10th one, it's about finding what are the
Hammer can be recognized by, it's going to give us the answer right here. The real body is at the upper end of the trading range. The color of the real body is on point. A long lower shadow should be twice the height of the real body. It should have no or a very short upper shadow. The market should be in a downtrend. Okay, got it. The shooting star can be recognized by 4 criteria. The real body is at the bottom. The color is not important. A long upper shadow that's twice the height. Should have no or a very short lower shadow. The market should be an uptrend. Good. The hanging man has a long lower bullish shadow and a small real body near the top of the trading range. It shows that the market sold off during the session, but by the end of that session bounced back to close at or near the highs. Although the small real body of the hanging man could give a little hint that the bulls are losing some momentum, its long lower shadow nonetheless keeps the trend pointing north. Thus, we would need bearish confirmation before turning negative on the hanging man line. Okay, 12B. What's the question? What does a hanging man need for confirmation? A close under the hanging man's close.
right.
This confirmation is close beneath the hanging man's real body. The reason is that if the market closes lower the next day, those who bought on the close of the hanging man day are now hanging with a losing position. This is why I would also like to see the hanging man at an all-time high, or at least at the high in the context of a significant move. So we should write that, the hanging man is like near all-time high. Hanging man near or at all-time high. Okay. At least at the high in the context of a significant move. In this scenario, the longs entering on the hanging man session are in their position at new highs, thus making them more nervous. Consequently, those longs might decide to back out of their now losing position. That could cascade into more selling. Okay. 13, a one-sided shadow means that an extended shadow appears on the top or bottom of the real body. Therefore, a candle line with a long lower shadow is a hammer. The candle line with a long one-sided shadow above would be a shooting star. Okay. The real body of the shooting star can be either black or white. Even if the shooting star had a white real body, it would still be a close near the low of the session. Okay. Because the shooting star is potentially a bearish reversal signal, it must appear, so I'll write that down, shooting star must be uptrend, okay. Uptrend. It should have an upper shadow at least 2 times the height of the real body, okay? Combining a shooting star's long and upper and hammer would produce a high wave. You said that. Small real body indicates indecision. We talked about that.
Right.
When a stock in a strong uptrend and is in a strong uptrend and retraces in an orderly manner, you can watch for a small real body as a possible clue that the retracement is losing force. 19, the hammer and the hanging man have the same shape. The hammer, what difference are in from is that for a hammer, the prior trend must be down, and for a hanging man, up.
Right.
The hammer comes after a decline and has a long lower shadow, small real body near the top end, and little to no upper shadow. Okay. Although a classic hammer is potentially bullish reversal signal, this exhibit shows us the importance of putting candles in context of the preceding price action. 21C. Let's look at what the chart is.
I think that 21.
18. Oh, look, it skipped from 18 to 23.
Oh, that's why. Then
Actually,
maybe
there's a missing page here. So, all right.
that's okay.
There are even more questions we should have been answering. In this example, the market is making consecutively lower lows and lower closes and lower highs. This keeps a short-term downtrend intact. However, multiple hammers are reflecting that the market is rejecting low price levels as it descends. And consequently, the market's downtrend keeps us from buying, but the potential bullish implications of the hammer keep us from selling. So the best strat, I wish I could see what this looked like. Oh well. In scenario 2, we see a hammer confirming a prior low. Oh, all those other. Maybe it's all those other here.
23, yeah, from 20. Yeah, 19, 20, and 3 questions are missing. So next is from.
In scenario 2, we see a hammer confirming a prior low.
22 is missing. Okay.
Potential support area. Scenarios 1 and 4 would not be here. So which one is a hammer? In 22, we can look at that chart.
I don't think we have a 22 in there. It's missing.
No, but we have the charts.
Okay.
It said which one of these are hammers?
Hammers. Okay.
Yeah,
third one, and even the second one can be.
The second might have been a hammer here, but
yeah.
3. Question 12. What's the answer? Oh, we don't know because it's A, B, or C. But we could read about that. I don't know. It's too. We can't guess because we don't know what the question is. Okay. Candlestick lines with long lower shadows and small real bodies are hanging mans. Okay, we can't do 24, 25. Some requisites for a shooting star, including an uptrend, a small real body, ascending trend, no shadow. Okay. 26. A hammer is a candle line with a long lower shadow, small real body at the top of a trading range with little or no upper shadow. A hammer might also come after a downtrend. Scenario 3 meets these criteria. Scenario 1 does not have a lower shadow long enough. Okay. So the dangerous doji. So what I was thinking, dude, I'm just going to go to let me see, Yahoo Finance, and let's just, I wonder, do they have, I think they have candlesticks on here, and let's pick
No,
a,
I don't think so. We get here. Maybe you have to see that trending view RSM
which,
trading. Let me check that.
we could just pick a stock here. Let's just say like MRIN. Okay, and then let's look over like let's look over 5 days. And oh, this is not very helpful. But maybe we'll see lots of shooting stars. I mean, spinning tops. Where the heck? How do we see more? How do we see the candlesticks? And full screen. Okay, and then look for something. Do you see something where I could turn it into candlestick?
Line.
Candle.
A candle, right.
Okay, so.
Hammer. See, the hammer.
Let's where.
Yeah,
Oh,
near there. Yeah.
There's a hammer right there.
Yeah, right. So it's like downtrend, hammer, then it's like uptrend.
Let's find all of them. Let's find all the ones that we talked about today.
Okay.
So we see the hammer there. And why is this the hammer? Because it was a downtrend. There's a real body there that's very short. Doesn't matter what color it is.
Right.
And the point is, and there was a very long lower shadow.
Right.
And look at that. It did show, boom, went up.
And I think there is a hanging man, then continued. Like it's 10 lateral, then
there's a shooting star. No, that's not a shooting star because it's got too big of a body.
Right.
There's a shooting star right there. Yes?
Yeah.
Because a shooting star, I'm looking at it, you need an uptrend.
Yeah, we can call it as a evening star as well as we go further. So that's later.
So look at that. Yeah, look at that. That gave that. And let's see, we found a shooting star. We found a hammer. Let's see if we can find a hanging man, which it looks like a hammer, but it's at the top. There's a hammer right there.
Yeah, hanging man.
Excuse me, hanging man. That's a terrible thing, though. You had to wait till the next thing, and look how much it lost.
Right.
That was wait for a terrible signal. Looking at what the heck just happened here? Did it just jump?
It's called yeah. It's jumped. See, what I can say. It's called.
It's a different day. It's the next day.
Next day, yeah. In the after extended hours, that price action might have happened. That's why, yeah.
Yeah, let's look back a little further and see. Like, do we see any more of them here? Do we see a high wave? Here, this is a high wave right here. Would you say this is a high wave?
It's not a small real body, right?
Oh, you're right. You're right. It doesn't have a small. So let's find a high wave. And whoa, these are a lot of spinning tops. Right? Spinning top.
Yes, spinning tops.
Spinning top. All of these things are spinning tops. So that's.
I think this one is high wave there. Yeah,
you found something?
Yes, I found there.
Oh, there's a hanging man right here. I mean a long wave. This one here, right?
We can consider that because there's a long lower shadow.
Would
Yeah.
you say this is a long wave too?
Yeah, we can see that one as well. Yeah, the red one there.
A long wave means very big confusion.
Yeah.
You said there's a long red one somewhere?
Yes. No, long wave, that red.
This one?
No, on September 1st week, the next after three session. Yeah.
Right here.
Yeah. That one is also a long wave. Yeah.
Hanging wave.
High wave.
High wave, which means total and utter confusion. Spinning top, like we've got one here. We have one maybe here. That means indecision. So don't make any decisions at that point.
You're right.
Especially at this point right here, because it's a high wave. Then we want to look for a, let me see, is there another shooting star? And let's see.
I think it's there. That's a green one. I found it. Long upper shadow.
This one here?
No, not that one, because we need the uptrend, right? Just maybe from the right side, more on the right side.
Oh, is that a shooting star or is that more like a spinning top?
No, I think it's like a spinning. There's no shooting star. Yeah.
Let's keep going and find a shooting star. Star. There, shooting star here.
That one, yes, we kind of can consider.
Like a shooting star, right?
Yeah.
Got an uptrend, and then we don't care about the color. Okay. And let's find a hanging man. Oh, right here.
But hanging man, right? Yeah, right there.
It's not that much of an uptrend though, but I guess it's still considered an uptrend. It's just not a big uptrend, right?
Yeah, it's like lateral moving. I'm not sure whether we can.
And yeah, because look at that here. It's the same thing on this one. There's a hanging man there, but it's very lateral.
Yeah.
So, but what's interesting in both situations, boom. It dropped on all those times. And okay, so I think we've got a good.
Yes.
What do we wanted to find? Let's find one hammer. Let's find another. Oh,
it's there.
Right there.
Right there, yeah. No, right there. Not.
Boom.
That's not a hammer, right? Which one you're talking about? That's not a hammer.
Oh, no, that's not a hammer.
See, it's there. And after the 10-15 session on the right side, there is a small real body.
This one here.
No, go there after 4-5 red. After just 21st.
21st.
April 21st.
There's a hammer. Yes. Okay, good. Hammer. So why did it go? Do you? I know that we haven't gone over this one yet in the book yet, but why did this go up after this? Or maybe it's not this signal. Maybe it's something in these signals here that's telling it. But anyway, the point is, it's not a hammer.
It is. That is the one. I think that is the morning star. Mostly morning star is like comes after the downtrend. Yeah, that's later part. Yeah.
Next time is we're going to learn doji, dragonfly doji, gravestone doji, northern doji, southern doji. Okay. Very cool. This is very, very exciting, and I'm glad we're doing this together. I wish more people would join. This is so fascinating.
Educational, right? Very much. Yeah.
That's it. So for those of you guys watching on YouTube, hope you enjoyed this. Hope we're inspiring you to get more involved with stock market investing. And even I'm learning more. I'm having a lot more faith in these technical indicators that could really help improve I do a little bit of day trading, but it's more like I'll do it once a month when Bhavya tells me about something that she did and like, oh, okay, I want to get back into it. But now I'm starting to think I could put together a real strategy. And I know Bhavya's been working on hers for many, many months.
Yeah, and still finding the my own ways.
We'll get there. We'll get there.
Right.
So, bye-bye to you guys on YouTube. Hope you'll join us at breakdiving.io.
Yeah.